Hi, this is Graham Bibby on the 23rd of June 2016, coming to you with our first Camtasia where I'm using the camera on the computer and I'm also using a microphone. So be very interested to see how that comes across and if it's better or not. I'd like your comments back on that one. So today I wanted to do a small Camtasia video about my special situations service. And from my previous emails, blogs, and videos that I have a network of advisors that I am in their inner circles, in their research groups that I subscribe to, and they're very, very bullish on the resources sector across many of those, but in select items and also on gold and silver. So I just want to take you through that because we had a great run since February, and those that were in early in February profited very well. And then we had a correction which took us out, and then we've gone back in, but we've got another correction. But I just want to show you these trends and why we're still there, even though if you come in recently, you'll be showing a bit of a negative in your portfolio. There is more volatility with this because of the nature of the area we're in. And in lies that, the opportunity, because where it's more volatile, it can move very, very strongly. So let's start off here. I've got NUGT, which is the direction daily gold miners index. It's 3 times leverage. And we had this breakout here where this arrow is, if you can see the arrow, in February. And the price then was 30. The early people got in at 30. Some other people got in at 50. And then we went all the way up here to 120. And then a severe correction came in. So this correction down here, normal, because stop losses go at this bottom, this bottom, this bottom, all the way across here, sideways movement, this bottom, this bottom, this bottom. And then when we go below here, that's when I had to take the decision to withdraw for the time being, because that correction was a bit more than you would normally expect. However, if you've gone from 30 to 120, 4 times your money in just over 3 months, then you expect to get a reasonable size correction. So we corrected from 120 down to 70, which is 40 something percent. But if you got 3 or 4 times, that's what you expect. And then we've broken out again here, which is why we've taken some new positions, but we've corrected back again. But we've corrected back above the moving average, and we'll be looking for it to stay above that moving average. Now, to give you an example of where we are, let's go back and go back. You can see here the rise, even though it's great in percentage terms, from where we came from in 2013. We're currently at 99.94, and as we look up right here, we were over 1,000, so that's over 10 times, so down 90% still from 2013 levels. And if we go even further, this is earlier in 2012, and then if I just switch that to weekly, it gets more and more amazing because back here where the arrow is now in 2011, this fund was 20,000. So it's gone from 20,000 to under 100 even after the rise. So you work that out. Also down 99% still. So the upside is huge. So that's why we're in it. We've broken the downtrend. Now let's go down here. I don't want to show you too many things. This is a CRB index, which is really why I'm still very, very strongly behind the stories that I get of the reasons why commodities are going to go up. This is commodities index. You see it's still positive in trend. It's not quite severe but as the other ones, but it broke out of the downtrend that's been in place since 2014, and this has got a long way to go as well because it's gone significantly below the bottom of the global financial crisis. That's why people like Rick Rule say this is the worst correction they've seen, worst bear phase, and they quote the Toronto index, resource index, which normally drops 50% in a bear market before we hit the bottom. This time it corrected 50% and another 50% and then corrected another 50%. So they believe this is setting us up for the opportunity of a lifetime. This is where the people like Goldsmith or Nassers, all these people of legends are made of, Warren Buffett from the Great Depression. This is the times when they've made all their money, taking positions and being able to be prepared to put up with volatility in order for the upside that this presents. I have to operate my stop losses because my belief is you only know what you know. This is just stories, and we're seeing if the story is coming true. This is Coeur de Mining, which again we got into, the early people got into it in February at 2. Whew, this thing rolled all the way up, so now it's $9.42, which is not quite 5 times your money, but almost 5 times your money in 5 months. So this stuff works. We've had a strong movement. We had a nice correction here. We're moving higher. This is mainly silver mining, and you know it's come a long way. It's 942. In 2012 it was 32. It hasn't corrected as much as everything else, but it's still down 65% from its peak. And if we go back a bit further, in 2011 it was somewhere in the region of 34. So there's 3 to 4 times upside from here. Not as much as other things, because this is one of the cheapest silver mining producers in the world, but looks fabulous to me. I want to put in there the Sydney Ords. It is up, but it ain't going to perform anything like the other markets. But if you're in it, okay, you're in it. But I would even liquidate, if you've got commodity positions here, BHP or Rio, I would sell those and buy something with more upside. Because if you suffered the pain, now you want to maximize the gain. So this was the down phase from 2015, and we're in an up phase. This is the index, so it's not just commodities. The index is roughly currently at, in 2016, where it was in 2006, 10 years on. This is why I don't subscribe to buy and hold, and you've got to follow those trends. Here's BHP, which is, you know, again, here we are here, and it's at the levels of 2005. And the big boys tell you to buy and hold and pray, I call it. So what money are you making? You're not making any money. And a lot of people, you know, buy towards the high, sell towards the low. If they've held on, you really got dead money. You got to get it working for you. And you can see, yes, it's risen. It's risen from about 20 to 28. Well, that's great. It's 40%, but I've just shown you stuff that's risen 100, 200, 300%. I would replace this with a position in the Insiders Club, because that's where you're going to get the best bang for your buck, as they call it. It's in an uptrend, but we need to see that to move up. I am looking at some other areas, and we have been taking some different positions. This is in the gas industry. The gas is down a lot. This is 2014 levels here of 30, currently 8, looking in a nice uptrend. If I zoom in a bit, this is the uptrend. Gas and oil is now being favored by some of the wealthiest people on the planet, and it does look like they're in uptrends. So let's see if I can find a this is petroleum resources, uptrend, not as strong as gold and silver, but in an uptrend. This one we've had for some time. This is Energy Transfer Partners. These guys have the pipelines for the oil and gas. So the stock, crazily enough, had this big decline along with oil, but this is not selling oil. This is getting paid for shipping the oil through its pipelines across America. And Mr. Warren Buffett picked up that this is an anomaly. The stock fell from 70 to under $20. So that's whatever you like to call it, 65–70% drop. But that's not logical. It's irrational. It's nonsensical. And now we're in a strong upward trend. It won't make as much as the resources, the gold and the silver, but it's definitely in an uptrend, and it has a nice dividend as well. So that's reached a new recent high, 40.26. So I just wanted to get this over to you just to show you that the positions we have are all still in great uptrends, but they're a bit volatile around this period. And because some of them are slightly leveraged and they're in a more volatile sector, you'll see movements of 3, 4, 5, 6%. Direxion gold miners was up 6.63 last night. You see how strong the movements are. And what I'm looking for is if we can get another run like this or another run like this, then your overall portfolio is going to be ahead, and then we'll be moving ahead. Then we'll be in a congestion phase. Then we'll be moving ahead again. So this is Graham Bibby on the 23rd of June 2016, just giving you a bit of a hand holding in this area, and looking forward to another strong move coming. If it doesn't and we correct from here, I'm sorry, but I'll have to advise taking profits, and we wait and live to fight another day. But we have had strong correction here in May. We broke out, we've tested back, now we're going to see it move again. And if that happens, it won't be long before we're in profit territory. And then if this momentum starts to build, it'll be happy days. So Graham Bibby, over and out. I hope you like the new format. I hope you can hear it more clearly. Just let me know about the video. Maybe I've got to have a bit more makeup or something. Or I might even try doing this with high definition cable using a screen behind me, and then I'm talking to you and pointing to the screen. So I'm looking to improve this reporting. So love your feedback. For now, bye-bye.